You are listening to the Manumit Podcast. My name is Casey, and I'm here with my buddy Glenn Johnson, investment advisor and founder of Jabez Financial right here in the Uncasville area. All right, Glenn, you ready to dive in today?
I am.
All right, me too. I want to start with a little Fed news today. You may be seeing the headlines about new leadership at the Federal Reserve, the group that sets interest rates that affect all of us. Now, President Trump wants to replace Chair Jay Powell with Kevin Warsh. So what kind of mindset does Kevin bring? Well, here he is on Fox Business recently. Let's take a listen.
They've made a series of mistakes, not just in the last year, but the last 5 or 6 years. And I think their track record is really quite poor in forecasting the growth of the economy from policies like the ones the president put in place. And their inflation forecasts have been terrible, too. That's why they were so late. And that's why we had this surge of inflation that's done the most harm to the hardest working Americans among us. I think until there's regime change at the Fed, until there's new people running the Fed, a new operating framework, they're stuck with their old mistakes.
Now, Glenn, Fed headlines can move markets overnight, but our retirement income has to last us decades. So can you talk to us about how you help your clients build a plan that is not dependent on who is sitting in that Fed chair?
Yes. And, to have conversations about the Fed and what they're doing, it's really important to understand some of this because let's start with it this way. Recognize that there is no right way to do the wrong thing. And the fact is, the founding fathers of the United States, they warned strongly against the even existence of a central bank. In fact, the last time that the U.S. government was debt-free was in 1836.
Wow. Been a minute.
Andrew Jackson was president. And the reason we were debt-free at that point is because he vetoed the recharter of the second bank of the United States. So there was 2 other central banks before the Fed. There was the first and the second. And each of them had a 20-year charter, but he vetoed their very existence. And it was at that point when the United States was debt-free. But what we have now with the Federal Reserve, it doesn't even have an expiration date. Mm-hmm. So today there's this power struggle between the Federal Reserve and the free market. Each one of them want to have the direction of the economy. Mm-hmm. And people greatly underestimate the significance and the impact that the Fed really has.
Yeah, I think that's kind of a big picture tug of war that most people aren't thinking about day to day. So I kind of want to make it practical for our listener who's listening right now. When you talk about positioning your finances, no matter what the Fed does, what does that actually look like inside of a real retirement plan for somebody?
Right. When constructing a retirement plan, we have to look at what interest rate environment are we in the first place. For example, if we're in a long-term secular bull market, we're going to use different tools. If we're in a long-term secular bear market, there again, we have to use different financial tools. So let's face it, when the Fed lowers rates, what does that mean? When the Fed lowers rates, 2 things happen. It gives businesses the opportunity to borrow more money and expand and grow. It also gives businesses the opportunity to buy back their own stock so they don't have to be paying so much in dividends. Either way, when the Fed drops rates, the business loves it. Mm-hmm. And any sitting president loves the rewards that come with reduced rates and a growing stock market. But in the process, the Fed loses control. Because if the market crashes and interest rates are already low, the Fed can't drop the rates any lower to prop it up. So when interest rates are higher, the Fed actually has more control over the market because they can always increase rates, but then they can also decrease them, and the Fed can regulate the economic growth more. Whereas when interest rates are really low, then the free market is more in control. Mm-hmm. So with a new Fed chair coming in with a different philosophy of how to release funds for economic growth and economic stimulus, yes, things are going to change. But the Fed also has a habit of not just responding too late, like Kevin Warsh was saying, but they also overcompensate. So just like when Ben Bernanke started the quantitative easing after 2008, not only did they print too much money, they lowered interest rates down to 0, and they kept them there for too long. Mm-hmm. Then after COVID, when they dropped rates, they printed too much money, like Kevin was saying, and that's what caused so much inflation. And so there has to be less movement by the Fed and more opportunity for business. So with all of this being said, how do we actually navigate constructing a financial plan and a cash flow system that's going to work well for you, regardless of who's sitting as chairman of the Fed and regardless of who's sitting in the White House. Mm-hmm. It has to do with using the right financial tools at the right time. Mm-hmm. Where, like I said, there's financial advisors that are all about the market. There's financial advisors that are all about annuities. Well, there's different seasons and different times and different situations where both of them are appropriate. So working with a seasoned financial advisor, like I said, I've been doing this for 25 years and I love it. Mm-hmm. And so when we put together a financial plan for somebody, we're able to use the right tools at the right time and not be persuaded by having to work with some giant financial institution with their own agenda saying, push these types of products. Mm-hmm. So when I sit down with a client, people get what they need when they need it, and we're able to continue working together. And like I said, I've been doing this for 25 years. And I love it.
Yeah, so it sounds, Glenn, like it's less about predicting policy and more about using the right tools in the right way. So I'm curious if you can speak to how somebody knows when they're working with the right kind of advisor to actually do that well.
Well, a good advisor is going to be able to explain why they're making the recommendations they're making at that time in such a way that it makes sense to you and you understand it. And interestingly enough, not everybody cares. A lot of times, it's funny, I'll sit down with clients and they'll have no interest in why I'm making the recommendations I'm making. But I also know that it's important for them to at least understand what's going on so that when the economy changes, then they'll be able to say, oh, that's why I have what I have.
Right.
So understanding why you have what you have is important. And when it comes to using the right tools, look at it this way. Take home improvement contractors. They all have the same DeWalt tools. You know, in fact, I've got my own collection of them, and I love having them. But the home improvement contractors, they have access to the same tools, same site plans. But we all know most of them don't even show up when they say they're going to. And it can be a roll of the dice whether or not the work is actually going to get done on time and within budget. And getting financial advice isn't that much different. But what becomes important is actually working with somebody that you can trust in the process. Now, I'm really blessed because I've always got a different project going on, whether it's at home, a property, a business office, something. And so I've got contractors that I can work with that I don't even need to have a signed proposal. Mm-hmm. I can just share with them, look, this is my project, this is what I'm doing. They show up and they do it.
Yeah, you know they're going to do what they say they're going to do.
Right. So I've got people that'll operate heavy equipment, my electrician, my contractors and painters, and I've got all these people that can do this work for me because I know them. I know the work's going to get done. I know it's going to get done correctly, and they know they're going to get paid immediately.
Mm-hmm. Win-win situation for everyone.
That's right. And now when working with a client with sometimes treacherous economic times, what's important is that we stay in touch, we have good communication, and we've gotten to know one another so that as the cycles of life go up and down, at least we know we've established the relationships with people that we can count on. And that's what creates the most success.
Mm-hmm. Do you find that most people realize how exposed they are to interest rate decisions, or is that something that they only discover maybe after a rough year?
Well, prior to us getting together, they'll have experienced it after a dot-com bubble or a 2008 crash. Mm-hmm. That's when they realize, oh, maybe that does have something to do with it. But I'm blown away by every time I sit down with new clients that they've never even had conversations. I'm talking about people that have had financial advisors for decades. Mm-hmm. They've never had the conversation with their financial advisor about what the Fed's involvement is and with the direction of the economy and what a price per earnings ratio has to do with anything. They're completely oblivious to even the underlying mechanics of a mutual fund, yet they've got hundreds of thousands or millions of dollars in them. It blows my mind how ignorant, some people are. Not to fault them. That's just the way it is. They're uninformed. This is why I invite you to come in for a conversation, and we can talk about what it is that you have, how you got to where you are, and also what are you looking to accomplish. And as we pull apart what it is that you're working with, we'll be able to construct a plan that will deliver you the exact kind of cash flow and the exact kind of retirement that you want to be living.
A lot of people, I think, don't even realize that there's another way to plan until they feel the stress of it. So if you're listening and you're thinking, I don't want to spend retirement worrying about rate cuts or market swings, we want you to know that there is help available. 860-288-9977 is what you need to be dialing. This is going to connect you with one of our Jabez Financial teammates, and they will help you find the next convenient time on the calendar and get you set up for your very own retirement projection with Glenn. 860-288-9977, or you can head online too if that's an easier route for you. JabezFinancial.com is where you can find us, and that's Jabez, Jabez, and you just click that contact button up top. You'll fill out your information for us super quickly, and then we will be happy to reach out directly to you. Thank you so much for listening to this episode of the Manumit Podcast. Make sure you subscribe wherever you get your favorite podcasts so that you never miss an episode, and we will see you next time. Take care.
Investment advisory services offered through Jabez Financial, LLC, a registered investment advisor firm. Registration is not an endorsement by securities regulators. By contacting us, you may be provided with information about insurance products, including annuities offered through Glenn Johnson, Connecticut Insurance, license number 4628409. The firms are separate entities. Annuity guarantees rely on the financial strength and claims-paying ability of the issuing insurance company and are not offered by Jabez Financial, LLC. Read your contract for restrictions, limitations, or penalties. Jabez Financial, LLC is not licensed in all 50 states. To find out if Jabez Financial, LLC is licensed in your state, please call 860-390-0093.